Thank you, Komal, for such a nice introduction. Good afternoon, everyone, and namaskar. I am happy to be here to present my views on the topic deduction of TDS on salary. And first of all, I'm sharing my presentation with you. Is my screen visible? Kavita, is my screen visible?
Yes, it's visible.
I am actually connected from a remote area today due to my sudden travel plans. So I am turning off my video for a better
Voice is
connectivity.
a little bit low, Tarun. Can you speak louder?
So I am turning my video off for a better connectivity. I think there is a network issue at my end.
Okay.
So I hope my voice is clear now.
Yes, you are audible, Tarun.
Yeah, it's better.
Okay. Okay. We'll start with the session. So friends, today we are going to discuss about the provisions and practical aspects related to the TDS on salaries and filing of Form 24Q and things that you should keep in mind while filing the TDS statement. What we usually also call a TDS return. So Form 24Q is basically a quarterly statement for deduction of tax in respect of salary paid to employees under Section 192 of the Income Tax Act and income of specified senior citizens under Section 194P. So this statement is used to report TDS deductor under these two sections. And this is very right time to discuss this topic, considering the fact that the due date to file the TDS statement is just around the corner. And friends, this topic becomes very important because unless and until we understand the law of TDS deduction and practical issues involved in the filing of TDS statement, so there are high chances of making mistakes in the filing. So if you make a mistake in filing your TDS statement, there are major repercussions of this. You might need to submit a correction statement or which we call a revised TDS return. And if a person fails to furnish a TDS statement on or before the due date or furnishes inaccurate information in such TDS statement, he might end up paying the penalty under Section 271H. And you may also need to pay interest and fees for these defaults. And there are prosecution provisions as well in the act. And last but not the least, your employee will also end up suffering because of these defaults. Since mistake in filing leads to unnecessary hassle for them because of the mismatch in the Form 26S of employee and actual salary data. And she might receive a notice from the tax department for adjustment in the income tax return. So we have structured our today's session in a way that we will cover the important legal provisions and also touch upon the practical issues relating to Form 24Q. And we have divided our session into two parts. In the part one, I'll be covering the legal aspects. And in the second part of the session, my co-speaker, Ms. Kavita Sharma, will be taking up the practical aspects of filing of Form 24Q. So I'll be discussing majorly five things in my part of today's session. The first one is Section 192, that is deduction of tax at source on salary. Then the mechanism of computation of TDS on salary. Then we will discuss upon the relevant due dates and the consequences of default in TDS compliance. And then we'll cover the Section 194P and its compliances. So let's start with Section 192. So if I go by any TDS section under the Act, there are mainly six components in the TDS provision. And the first one is the nature of payment. So like under section 192, we discuss about the salary. And similarly, under section 194J, we discuss about the professional services, or under 194C, we discuss about the works contract. The second important element of a TDS provision is deductor. That is, who is required to deduct TDS under that section. And the third element is deductee. That is, on whose payment TDS is required to be deducted. Fourth one is threshold limit. So fourth one is threshold limit. That is the amount above which the TDS is to be deducted. And the fifth thing is time of deduction. That is, at what time the TDS shall be deducted. And last thing is the rate at which TDS is to be deducted. So as I explained, the first important element of any TDS provision is the nature of payment. Like under section 192, TDS is to be deducted on the payment of salary. So TDS will be deducted if the payment is in the nature of salary. So if the payment is not in the nature of salary, TDS will not be deducted under section 192. So it might be some other section under which such payment might fall. So for deducting TDS, first of all, we need to establish the fact that there must be exist an employee-employer relationship. Then only the payment can be taxed as salary. And such a relationship exists when the employee works under the direct control and supervision of his employer, and he carries out the work under his instructions. Thus, the law essentially requires the deduction of tax when the payment is made by the employer to employee and the payment is in the nature of salary. There are various principles which has been led by the judiciary over a period of time, so which establish that when the relationship of employer-employee shall be deemed to be there. So if there is a lack of employer-employee relationship, such payment might fall under the head business and profession or other sources. Similarly, if any engagement for any work is incidental to the exercise of the profession, then such gains will be taxable under the TDS provisions of section 194J and not under section 192. So now coming to who is liable to deduct TDS under section 192. So it provides that TDS is to be deducted by any person responsible for paying any income chargeable under the head salaries. Thus, every employer, be it individual, HUF, firm, company, university, cooperative society, local authority, government, or such other person is liable to deduct tax on salary paid by him. So if it is a HUF, the responsibility shall lie with the Karta. And for firms, it shall be the partner who will be responsible. And in case of the company, the principal officer shall be liable to ensure the compliance of TDS provision. So tax under this provision is to be deducted, be it the person is a resident or a non-resident. So residential status is not relevant here. So sometimes the question comes into the mind for a payment made to non-resident, the TDS to be deducted under section 192 or 195. So section 195 provides that any person responsible for paying to a non-resident any sum chargeable under the provision of this act shall deduct income tax thereon at the rates in force. But section 195 specifically excludes the income chargeable under the head salaries from the ambit of section 195. Therefore, if payment is made to a non-resident person, the liability to deduct TDS shall arise under section 192 only. So if a salary is paid to a non-resident, the TDS has to be deducted under section 192. And if a salary is paid to a non-resident for services rendered in India, it shall be regarded as income earned in India. This case is specifically covered in section 9, wherein the salary payable for the rest period or leave period, which is both preceded or succeeded by service in India and forms part of service contract of employment, is regarded to be the income earned in India, and the TDS shall be deducted under section 192. So now coming to the what is threshold limit for deduction of tax under section 192. So TDS is required to be deducted under this section if the income under the head salaries is above the maximum amount not chargeable to tax. So maximum amount not chargeable to tax is 2,50,000 for the normal taxpayers individuals. But in case of senior citizens of 60 years to 80 years age, this limit is 3 lakh. And for super senior citizen, that is above 80 years of age, this maximum exemption limit is 5 lakh rupees. Now coming to the timing of deduction of TDS, that is when is tax to be deducted. So section 192 provides a responsibility on the employer to deduct TDS at the time of actual payment of salary. Generally, we see in the other TDS provisions, the TDS is deducted at the time of payment or credit, whichever is earlier. But in the case of salary under section 192, TDS is to be deducted at the time of payment. Therefore, if employer makes any payment of advance salary or arrears of salary, the TDS to be deducted at the time of payment. And one important point which is to be noted here is that income under the head salary is taxable in the hands of employee at due basis, whereas TDS is deducted by employer on the payment basis. So there is a difference of time of taxation between when the TDS is deducted and when the income gets taxed in the hands of employee. So now coming to the rate of TDS. So basically TDS under salaries is deducted at slab rates, though TDS can be deducted at. So while in the first step, we calculate the estimated tax liability of the employee on his salary income. So section 192 provides that the employer is required to deduct tax at source on the amount payable at the average rate of income tax. So this is to be computed on the basis of rates in force for the financial year in which the payment is made. So the rate of taxes are further to be increased by health and education cess and the surcharge if it is applicable. So what we practically do is we compute the estimated tax liability of the employee at the beginning of the year. Then every month, 1/12 of that net tax liability is deducted from the salary component. So if employee does not provide his PAN, then tax is deducted at the rate of 20%, or the average rate which we just computed in the step 2. So whichever is higher, at that rate TDS is to be deducted. So can TDS be deducted at lower rate? So TDS can be deducted at lower rate if the employee has obtained a lower deduction certificate from the assessing officer. Employee can apply to the assessing officer to issue a nil or low TDS certificate. Assessing officer generally issues this TDS certificate if the income of employee justifies the deduction of tax at a low rate. So this application can be made by employee in form number 13 to the assessing officer at the Traces portal. Now, another very interesting question comes in: the TDS to be deducted under the old regime or a new regime. So the Finance Act 20 has introduced section 115 BAC in the Income Tax Act, which provides an option to the individual and HUF for the payment of taxes at reduced rates by foregoing certain deductions and exemptions. So the CBDT has clarified that if the assessee intends to opt for the new provisions, he can intimate and give a declaration to the employer for deduction under the new regime. So if the intimation is filed by the assessee, it cannot be modified during the year. So it is not like that he comes out again in the mid of the year that now I want to change this option. Although he's free to choose option at the time of his personal ITR filing, since the intimation submitted to the employer will not amount to the exercise of option to opt for new regime under section 115 BAC. So is it possible that employer can choose for the one regime in 1 year, in the next year he can choose for the another regime? So basically, in all circumstances, the scheme opted in the intimation given to the employer shall remain valid throughout the year. So during the mid of the year, the employer is not have an option to change for the scheme under which he wishes to be taxed. But in that second year, he can change the option. But if a employee has an income under the head business and profession, so if he has once exercised that option, it cannot be changed in the subsequent year. Now let's discuss about the computation of TDS on salary. So we need to compute the estimated income from salary. So how we compute the income from salary is governed by the computation provisions of salary under section 15, 16 and 17 of the Income Tax Act. So section 15 provides that what all income will be chargeable to income tax under the head salaries. Section 17 provides for the list of items to be included in the salary. There are various perquisites, allowances, and profits in lieu of salary, which becomes part of the salary income. So here we need to have a good understanding of the provisions for taxation of salary, like how housing rent allowance to be computed, how rent-free accommodation to be computed. So I even personally use the e-TDS software of Taxmann for the TDS filing. They have recently rolled out a feature providing the detailed computation of salary income, which is actually quite helpful for me as well. I have requested Kavita if she can spare the 5-10 minutes towards the end of the session to give a demo of that feature as well. Now coming back to the computation. So once you have computed the income from salary, you need to add the income from the all other heads like house property, profits and gains from the business and profession, capital gains, and income from other sources to arrive at the gross total income. However, it is to be remembered that the loss under such head is not allowed except the loss under the head house property, which is allowed to the extent of 2 lakh rupees. So while computing the taxable income, the deductions under Chapter 6A of the Act are to be allowed to be deducted from the gross total income. Then you deduct the taxes already deducted by other person and relief under Section 89. Then you arrive at the estimated tax to be deducted under Section 192. The provisions of Section 192 allow the deductor to make adjustments for any excess or shortfall in tax deduction arising out of any previous deduction or failure to during the year. For example, if there is a increment in a salary in the mid of the year, you need to adjust for the incremental tax which is to be deducted. And similarly, if the salary is reduced, then you also need to adjust the shortfall. If the deduction of tax on salary payable is in foreign currency, then the such foreign currency is to be converted into the rupee at the telegraphic transfer buying rate of such currency as on the date on which tax is required to be deducted at source. So this is how basically we compute the deduction of tax on salary income. Now there is important point of TDS on non-monetary perquisites. So basically perquisites are divided into two parts, that is monetary perquisites and non-monetary perquisites. Monetary perquisites are taxable for all employees and non-monetary perquisites are taxable in the hands of specified employees. So there is an option given to employer to pay the tax on non-monetary perquisites. So the employer may make the payment of such tax on the perquisite without making any TDS from the salary of the employee. And the tax paid on such non-monetary perquisite by the employer is exempt from tax in the hands of the employee. But the employer will have to pay the tax at the time when such tax was otherwise deductible. That is, at the time of payment of income chargeable under the head salaries to the employee. Now it is quite possible that an individual is working under more than one employer or has changed from one employer to another. So the employee is now required to furnish to the employer details of the income under the head salary due or received from the former employer, or if he's working under two employers, the salary is receiving from the another employer, and the TDS, if any, has been deducted by the other employer. Then the current employer under which he is working is required to deduct the TDS on the aggregate amount of salary, that is, including the salary received from the former or another employer. So this is what we discussed in the last slide as well. If there is a change in job during the year, similarly, the TDS has to be computed in this case as well. Relief of self from salary paid in arrears or advance. So there is a section 89 in the Income Tax Act that provides for relief to an assessee to whom salary is being paid in arrear or advance, as a result of which his total income is assessed at a higher rate than at which it would otherwise would have been assessable. So if the employee is eligible for the benefit of relief under section 89, so he may submit such details to the employer to compute the relief and provide the benefit of this while computing the TDS on salary. So another question comes, is other income to be included while computing the TDS on salaries? So it is up to the employee. He may furnish the details of income under the any other head, like the house property, business and profession, capital gains, and other sources to his employer. So once he furnishes the details of this all income, the employer will consider them while making the computation of TDS under the head salary. But the losses under the other heads will not be considered except the loss under the head house property, which can be considered maximum up to rupees 2 lakhs. Now coming to the relevant due dates. So TDS deducted on salary is to be deposited by 7th of every month for the April to February, and for March it is to be deposited by 30th of April in case of employers other than government. So if it is a government employer, TDS is to be deposited on the same day if payment is made without a challan, and if payment is made with a challan, then it is to be deposited within the 7 days. Now, due dates to file Form 24Q. So for the first quarter of the financial year, Form 24Q is to be submitted by 31st of July. For the second quarter, it is to be submitted by 31st October. For third quarter, it is to be submitted by 31st January. And for the fourth quarter, it is to be submitted by 31st May of the relevant assessment year. So for an example, for the financial year 21-22, we need to submit Form 24Q by the 31st March 22. Employer is also required to issue Form 16 to the employee. So Form 16 is to be issued once in a year, which is by 15th of June of the financial year, immediately following the financial year in which amount was paid and tax has been deducted. So for financial year 21-22, Form 16 has to be issued by 15th June 22. Now coming to the consequences of defaults. So there are various provisions in the Act if you make any default in the compliance. So we will quickly run through these provisions. Interest for default in deduction. So if you make a default in deduction of TDS, interest is to be paid at the rate of 1% per month from the date on which tax was required to be deducted and ending on the date on which tax is actually deducted. So this is the interest for default in deduction. So if there is a default in payment, the rate of interest is 1.5% per month, starting from the date on which tax is deducted and ending on the date on which tax is actually deposited with the government. There are also penal provisions and prosecution provisions. So if a deductor fails to deduct the tax, and he shall be liable to pay penalty under section 271C. In such a case, the joint commissioner may impose a penalty of a sum equal to the amount of tax which such person was failed to deduct or pay. Similarly, there are prosecution provisions under section 276B, wherein a defaulter can be prosecuted for a period of 3 months to 7 years. Disallowances of expenditure. So there are disallowance provision under section 40A IA. So if tax is not deducted and deposited on the salary paid to a resident person in India, so 30% of the expenditure shall be disallowed in the hands of deductor. But if a salary is paid to non-resident or a resident person outside India, the 100% of the amount shall be disallowed under section 48 III. So there is a fee for delay in filing of TDS statement under section in form 24Q. So if a person fails to furnish a TDS statement on or before the due date, so he shall be liable to pay a fee under section 234E. This fee is rupees 200 per day for the period during which the failure to file the TDS statement continues. But the amount of fee shall not exceed the total amount deductible under the TDS provisions. And this fee has to be deposited before the submission of the TDS statement. Further, there are penal provisions under section 271H for delay in submission of TDS statement. So in such a case, penalty may be levied up to from rupees 10,000, which may also be which may be extended up to rupees 1 lakh. Now coming to section 194P. So Form 24Q, which we just discussed, is used to report the TDS under section 192 and section 194P. So section 194P is a provision for the senior citizen of the age of 75 years or more, having only pension income and interest income. So if a tax has been deducted under section 194P, the senior citizen will not be liable to file his return of income. So there are few conditions under this section. So in such case, the income of the senior citizen shall include only the pension income and interest income. And interest should be received or receivable from the account maintained by such senior citizen in the specified bank. And pension income should be received in the same bank. The senior citizen is required to furnish a declaration in Form 12 BBA to the specified bank containing the particulars related to the pension income. And the declaration in Form 12 BBA can be furnished in a paper form. So the specified bank shall, after giving the benefit of deductions under Chapter 6A and rebate under Section 87A, compute the total income of such senior citizen for the relevant assessment year and deduct income tax on such total income on the basis of the rates in force. So what exactly we mean by the specified bank? So specified bank is a scheduled bank which has been appointed as agents of the Reserve Bank of India under Section 45 of the RBI Act. So if the TDS of the senior citizen has been deducted under Section 194P, so such senior citizen shall not be liable to file his return of income for the assessment year relevant to the previous year in which the tax has been deducted. So this was about the legal provisions relating to the filing of Form TDS on salaries. Now I'm handing over the session to the Kavita to take up the practical aspects of Form 24Q.
Yeah, thank you, Tarun. It was a quite informative session on section 192 and 194P. I hope our viewers now have clear understanding about the TDS reduction under section 192 and 194P. So now we will discuss about the practical aspect. So let me share my screen. So as Tarun already briefed about the provisions part, now we will discuss about the practical aspect regarding Form 24Q. So what is Form 24Q and how it is to be filed? And we will also discuss about Taxmann e-TDS software, which will provide very easy and automatic calculations. So you need not to worry about filing your compliance. We will give you a complete solution for filing of your TDS return. So Form 24Q is basically divided into 3 parts. First part will contain the general information regarding the deductor, which will have TAN, PAN, name, address, and other details of the deductor. Then comes Annexure I and Challan information, and after that Annexure II. Now we will discuss these parts one by one. And in 24Q, Annexure I and Challan information, that is part 1, need to file quarterly. It is a quarterly compliance. But Annexure II has to be filed annually in 4th quarter only. I hope my screen is visible to all. These are some mandatory requirements for filing of 24Q. First of all, TAN of the deductor of the organization is needed. Then you should have challan copy with you. Employee name and PAN are required. Other detail like address is also required, but it is not mandatory, but you should mention address also for Form 16 purpose. Employee salary details needed and 12BB form for the claims. Then important to mention section code. For filing of Form 24Q, there are 3 section code provided by the utility. You need to select one of the code while filing Form 24Q. These codes are 192A, which is to be selected for government employees other than union government employees. 92B is to be selected for non-government employees or for private sector employees. And 92C is to be selected for union government or central government employees. So these are the section codes. This is part 1 of Form 24Q, in which we have to mention the employer details. You can see here we need to mention the TAN, PAN, particulars of the company, address detail, etc. of the deductor. So this is basically general information of the deductor. Then comes part 2 of the 24Q, which will contain challan information. Challan can be deposited in the same quarter or in earlier quarter also, but for those challan which you are mapping with the employee in that particular quarter, information has to be filled in this part. So this is second part in which challan information has to be given. In the challan information, you need to mention tax information, challan date, BSR code, amount, mode of TDS deposit, either you are depositing through challan or book entry, challan serial number. These are the mandatory requirements to fill in the challan information. Then comes Annexure I. Annexure I contains information of the tax deduction of employee. Here you need to mention the reference number of employee, PAN of the employee, name, section code which I just briefed in the previous slide, date on which tax deducted, date of payment, amount paid, and tax detail on that amount or TDS deducted on that amount paid. Then date of deposit, and if any lower deduction or no deduction, reason for that non deduction or lower deduction, or number of certificate, if any, issued by the assessing officer, as already briefed by the Tarun in previous slide. Then here has come Annexure II. Annexure II will contain the salary information of particular employee. It will contain the complete salary information like detail of salary, allowance, perquisite, other income information, and deductions also. Now, these are some important things to remember while filing Form 24Q. Like if employee is a part of your organization for a part of year only, like he was not there in first quarter or second quarter, but he was there in third and fourth quarter, even then you need to deposit or you need to deduct tax in third and fourth quarter and need to fill Annexure II annually. Another thing is, if no deduction is made in any of the 3 quarter or in any previous quarter, but in fourth quarter, even then Annexure II has to be filled. And if an employee has salary below the taxable limit, it is not mandatory to fill Annexure II for that employee. Then come Form 16. Form 16 is the TDS certificate. After filing Form 24Q, that is TDS statement, TDS certificate has to be issued by the deductor. That Form 16 also has 2 parts, Part A and Part B. Part A contains detail of tax deducted on salary, means all the tax you have deducted on salary and then deposited to the bank. This information will be mentioned in the Part A of Form 16A. And Part B will contain detail of salary, like Annexure II. Whatever information you have provided in Annexure II will be printed in Form 16 Part B. So make sure you have given right information in the Annexure II. Some other important points are valid PAN is mandatory and most required thing for filing this return, because if valid PAN is not mentioned, tax credit will not be given to the respective employee. So you have to make sure that you should mention valid PAN of the employee so that he can get credit of the tax deducted by employer. But in case valid PAN is not mentioned or employee has not provided his PAN, so tax will be deducted at higher rate as per section 206 AB. So in that case, statement, a correction statement can be filed afterwards. Means if you have filed a regular return and you have forgot to mention PAN or employee has not provided PAN and his TDS is deducted at higher rate, and now he wants to claim the credit, so you can file a revised return or a correction statement, and after that you can download the Form 16 from the Traces website. Now it is mandatory to download the Form 16, both the Part A as well as Part B from the Traces website only. And if an employee is working or work with more than one employer during the financial year, then each employer is required to issue Part A of Form 16, and Part B will be issued by the last employer at the option of the assessee. It means employee can give information to the other employer or to the latest employer, and then he can issue Form 16 Part B on the basis of the given information. But Part A can be issued by each the employer who has deducted tax. So this is about 24Q and Form 16. Now let me show you the our software, Taxmann e-TDS software. So I'll show you that how you can easily file your compliance related to TDS return salary. So this is our software. In this software, for filing 24Q, first of all, you need to create organization. We have given option to create organization here. You can create it manually. You can import it from .txt file. .txt file if you have, and if you have console file, you can import it from console file also. So once you have created the organization, you can see here we have given forms. You can select the organization. After selecting organization, it will ask which form you need to file. So you just a minute. My screen is visible.
Kavita, it is paused. Your screen is paused at a PPT.
Yeah, I think software was not visible, so I'm repeating it. First of all, you need to create the organization. This is the form for creating the organization. You can manually create it, and you can also import it from console file or from .txt file. We have given the option to import it also. After creating the organization, you need to select which form you need to file. Like we are filing for 24Q. So I have selected 24Q, fourth quarter. So here comes 24Q. First, you need to give challan details. We have given the option to import the challan from ALTAS also, so that you need not to create the entry again and again. Once you have deposited the challan in the ALTAS or in the, you have deposited the challan in the bank, it will create an entry in ALTAS, in your ALTAS portal, and here you can directly import the challan from the ALTAS. Plus, we have given Excel import also. Excel import also given. Through this option, you can export a blank structure and then can fill your detail in Excel and then can import. So you can import through Excel, you can import from ALTAS, and you can manually create also challan. So all the options to creating challan are given here. Plus you can also check the status of the challan. We have given the challan status. So you can check that it is matched or unmatched from the ALTAS portal itself. After filling the challan, Annexure I entry has to be made. So in Annexure I,
Kavita, your screen
you can
is paused
select the
again,
challan
actually.
for which you want to map the entry. Then you can select the employee name from your data bank. And here you can make tax deduction entry for the relevant employee, like salary payment and then TDS. So you can see it is as simple as that. You can also import from Excel. Annexure I can also be imported from Excel. Annexure II can also be imported. So Excel import is given everywhere. After filling Annexure I, this is quarterly compliance. You have filled the organization, you have filled the challan details, you have filled the Annexure I. This is quarterly compliance for 24Q. Now you can generate your return for first, second, and third quarter. But for fourth quarter, as I previously mentioned, Annexure II has to be filled. So we have to give the information in Annexure II also. In Annexure II, we have given complete calculation for all the allowances, perquisite, retirement benefits. So you just need to enter the data and software will automatically calculate all the taxable values and all the tax on the given information. Like I'm showing you for an employee.
Kavita, your screen is paused actually. So there are many comments coming
Salary is
in.
given. So all the whatever form of salary you have provided, like basic salary, DA, commission, bonus, advance, arrear, leave salary, or anything related to salary you have given, you can mention over here. We have also given the functionality of duplicate entry, like if you have entered 10,000 here and you want to repeat the entry in multiple months, so you can just do it by give Alt Shift Enter, and you can see it is automatically calculating total here, and this total will be mapped to the outer screen. All the validations, all the checks are already provided in the software, so you need not to worry about anything. You just need to provide the details and it will automatically calculate for you.
Hello,
See, the
Kavita.
total amount of salary is displayed here. Now we
Kavita,
want to add
sorry to
any
interrupt you.
prerequisite.
Your screen is freezed. Can you check?
Hello.
आपकी स्क्रीन मूव नहीं हो रही है, एक ही विंडो पे वो स्टक्ड है.
But it's okay. Just a minute. I'm sharing it again. Please confirm. It's visible now, Sumita?
Yes.
I'm on.
Please check the comments in the chat box also.
Okay.
So if anyone face any problem, then they post their the comments over there. No?
Fine. So it's visible now. I'm on allowance screen right now.
नहीं कविता, आप स्टार्टिंग से बता दीजिए, क्योंकि स्टार्टिंग से ये पॉज हो गया था जब आप 24Q सिलेक्ट कर रही थी, तभी से फ्रीज था. एक बार आपको थोड़ा वहीं से स्टार्ट कर देंगे तो बेटर होगा.
From Annexure II?
नहीं, आप फॉर्म 24Q जब आपने सिलेक्ट किया था वहीं पे फ्रीज हो गया था, तो आप वहीं से स्टार्ट कर दीजिए दोबारा से.
Okay, no issues. So I'm starting from 24Q again. In 24Q, first you need to fill the challan details. For challan details, we have given all the options, like you can import the challan from Altas from this option, get challan. You can also import it from Excel from this option. First you need to export it, and then you can fill the data in Excel sheet, and then you can import it. So from Excel also you can import, from Altas you can import, and you can also enter it manually. If you have the challan copy, you can also enter it manually in this form. After filling the challan information, Annexure I entry has to be made. In Annexure I also, import and export option from Excel is given. You can export the structure from this option, and then you can import the challan from this option. Sorry, import the Annexure I through Excel. Here I have already creating some entries, and you can also create a manual entry for Annexure I. Here you need to select the challan first, for which challan you want to map the entry. After selecting the challan, you have to select the employee information. And you need to provide the payment and TDS detail. This is the compliance part for 24Q for first, second, and third quarter. You only need to give the deductor detail, challan, and Annexure I detail. But for fourth quarter, Annexure II also to be provided. In Annexure II, we have given the detailed salary calculation. We have given the detailed salary calculation, like for salary. First, I need to select the deductee. For salary, for any form of salary, you can give information over here, like basic salary, DA, forming part, not forming part, commission, fixed or variable, bonus, advance salary, means any form of salary you can enter over here. You just need to enter the data and it will automatically calculate the taxable value of salary. Like I have given basic salary, DA. Now I'm giving detail for commission also. If you want to map the same amount in multiple entry, you can do it that also. By Alt Shift Enter keys. After saving, this data will be automatically mapped to the salary field. See, in 335, we have given the number as per Annexure II for the ease of the information. In 335 is the total amount of salary. So this value is automatically mapped to 335. And it will be mapped to your Annexure II 24Q also. Now, if you want to give the information regarding perquisite and allowance, you can enter that also. For allowance, we have separate sheet. All the allowance which are allowable and as per Income Tax Act are provided here. House rent, entertainment, transport, conveyance, research, all the allowance. And we have given calculation for all the allowance. Like for house rent, they are separate in separate pop-up for calculation. So here you need to give information about the house rent allowance. Basic salary we have already mapped because it is already entered. Other information you have to give it, like for in which city the house is provided, in metro or in other than metro. I am selected metro. Amount of HRA received, rent paid. See, it is automatically calculate the taxable part. So like this, all the allowances can be calculated. And perquisite, all the perquisite are also given. Furnished, RFA, domestic servant, gas, education facility, LTC, all the perquisite as per the Income Tax Act are provided in the software, and retirement benefits also. So in this way, you can easily calculate taxable part of all the employees of your organization. And after giving the information regarding salary, allowances, perquisite, retirement benefits, I hope my screen is visible to all. Yeah.
Yes, Kavita, your screen is visible.
Okay. So you can see after giving information about the salary or the allowance, it is automatically calculate your total taxable salary, and after calculating total taxable salary, standard deduction is also provided and tax on the total salary is also calculated. See, it is calculated, tax also calculated. You can also give information about the deductions and other income here. We have given the deductions for ATC, CCC, ATCCD1 in this field, and other than ATC, ATCCC, and ATCCD1 in another field. So all the deductions are also covered. So in this way, you can see, you can easily calculate tax on your salary and you can file your TDS compliance related to 24Q. So this is about our Taxmann e-TDS return. So now we can have query session. Any of the query from any viewer are welcomed. Tarun, you are available? Hello?
Yes, I am here.
Yeah, we have received some query in Q&A session.
So I'm able to read a question from Saket. So he's asking employees resident of Nepal and providing services in Nepal, whether TDS is applicable to deduct in India. If yes, then under which section? So Saket, we need to understand two things here. So in India, we have a residential based taxation system. So if a person is a resident of India, then his global income is taxable in India. And if a person is non-resident, then only the income which is deemed to accrue or arising in India is taxable in his hands. And the TDS is deducted under section 192 in the case of salary, be a person is a resident or a non-resident. So under section 9 of the Act, there is a provision if a person is rendering services in India, then those services are deemed to accrue or arise in India, and the income of salary is taxable in India. But as far as I have read your question, you have mentioned that the services are rendered in India and person is also a resident of Nepal. So the prima facie, it looks like that that will not be taxable in India, although we need to check upon the other facts as well. So prima facie, the answer is, in your case, the income shall not be chargeable to tax in India. Kavita, there are other questions related to the software. If you can take up those questions from the chat box.
Okay. From CS Rupali, the question, what is the cost of software? So Sumita, can you provide the link? Link will be shared and you can check cost and price of the software on that link, and you can also receive the link to buy the software if you're interested. Then salary is paid every month but not TDS applicable on the salary, then is e-TDS return 24Q for every quarter is required to submit it. Salary is paid every month. But if TDS is not applicable, I think you are asking about the salary below the threshold limit. So it is already answered by Tarun that if the salary is below taxable limit or below threshold limit, then no need to deposit TDS or no need to file the 24Q for that particular employee. TDS done up to Q3, but no Q4. TDS, do we need to match the total salary as it will be mismatch in Form 26 AS and Form 16? Yes, salary should be matched in Form 26 AS and Form 16, and it will be matched only when you have give the correct information while filing 24Q. Let me tell you that 24 from they will pick the information from 24Q Annexure I regarding salary and for TDS. So make sure that you have given the right information while filing 24Q Annexure I. Only then your salary will be matched with Form 16. Yeah, challan is required. Nil return cannot be filed. If you want to file if you don't have any challan or any information, you cannot file a nil return for 24Q. There is a declaration which you can file. It is available on Traces portal. If you don't have any information and you just want to file a nil return, there is a declaration you can file, but return cannot be filed. In 24Q, question from Mohit Singh. In 24Q, if we required to report all employees having non-taxable salary and generate Form 16 from them. If we required to report all employees having non-taxable salary. See, Form 16 is a TDS certificate, so it has to be issued only when TDS is deducted. If no TDS is deducted, no need to issue Form 16. In some cases, from Rajesh, received a question that in some cases salary is paid at year end, then TDS to be deducted monthly or can be deducted at year end when paid. This query is answered by Tarun. Tarun, can you repeat it? From Rajesh Shirsak.
So Rajesh, as we discussed in the earlier part of our presentation, so how the TDS is to be computed on salary, we need to estimate the salary at the beginning of the year. Then we spread that TDS amount on over a period of 12 months, and on a monthly basis, we deduct the TDS. However, if there is any shortfall or incremental, that can be adjusted. Otherwise, the TDS is to be deducted on a monthly basis. So there is a question from parents, salary paid to new employee, which is below threshold limit. However, he has not furnished details of previous employer. What should be done? So Terence, if the employee has furnished you the details only, then you need to consider the details of the previous employer. Otherwise, the employee can take care of that while filing his personal income tax return. As an employer, you are not responsible unless he gives a declaration to you.
Okay, Tarun. Another query we have received is the Annexure III in the latest RQ utility applicable for deduction under Section 194P only? Yes, Annexure III is specifically for Section 194P only. For salary, that is for Section 192, Annexure II is applicable, not Annexure III. Another is, can you give full demo of the software? Yeah, we can give you. But not right now because we have some time limitations. You can contact our. Pardon?
They can drop an email to the sales@taxmann.com.
Yeah, that's what I'm saying. You can contact our. Sales office and they can give you the video for full download. Then next question, Rajendra Somani. It is now mandatory to generate 16A, 16B from traces. Yes, now it is mandatory. Earlier, only part A has to be generated from traces, but now part B also to be generated from traces only. It is mandatory. From Jess, how to generate Form 16 if employee want without deducting TDS? No, I have already mentioned that Form 16 cannot be generated if no TDS is deducted. It is TDS certificate, so TDS has to be there. In Q1, no, from Sushil, in Q1, no TDS, but when it comes to Q2, we started TDS. Now, question is, we have not Q1 TDS, so can we show the Q1 salary detail in Q2? Tarun, can you take up this query?
Can you please repeat the question?
Sushil was asking that in Q1, no TDS, but when it comes to Q2, we started TDS. Now question is, we have not Q1 TDS. So can we show the Q1 salary detail in Q2? Interest will be applicable in that case.
So, right. So they have to compute the estimated salary for the entire year. So if you're deducting TDS on the Q1 part, then the interest is to be levied from the short deduction of the TDS.
Right. Can be done, but interest will be levied as already briefed by the Tarun. Interest will be applicable in this case. Then we have query from Vaibhav. If we paid salary in financial year 21-22 for financial year 2021, then in form 16 RB show the same. We are not getting this query. Tarun, can you explain this query? Are you getting this query from Vaibhav?
If we paid salary in financial year 20, for financial year 2021, then we show the same. Yes, so TDS is to be deducted at the time of payment of salary. So it is not to be deducted at the time of due basis. So it is to be deducted at the time of payment of salary.
Who is asking then in form 16 RB show the same? Yes, if TDS is deducted in financial year 21-22, then it will be shown in form 16 of that year only. Then from Mohit Singh, tax deducted in last month, March 22. So will there be only March 22 salary in part A of form 16? Whereas part B will be for 12 months. Part A, yes, in part A, tax deduction information is there, and in part B, salary information is there. So whatever tax you have deducted will be shown in part A, and complete year salary information will be given in part B. It is 16. Sorry, Mohit, I'm not getting what you want to ask. Is such difference invoke non-compliance? Which difference you are asking about? And one query is there from MI. It is form 16 need to issue for all as during assessment officer disallows it. Form 16 has to be downloaded from traces, and if no TDS is deducted, there will be no form 16 available on traces. Then how you can download it from traces? It is mandatory to download it from traces. You can give the information in Annexure II, but form 16 part A will not be issued to them. And it is not mandatory if it is below the threshold limit. Optionally, you can enter it. Tarun, we have some queries related to compliance again. Hello?
Yes, Kavita.
Yeah, from Himanshu. And from...
So Himanshu is asking what are the specified banks in case of section 194P. So Himanshu, CBDT has issued a notification number 98/21. So wherein they have said that scheduled bank under section 45 of the RBI Act will be considered as specified bank. So there is a question from Anant. Advanced tax and self-assessment tax by employee himself. No, the advanced tax and self-assessment tax cannot be considered while computing the salary income. So I think we are already over time. So if you have any queries, you can write to us at sales@taxmann.com. Our team will try to answer all your queries. So I think,
Yeah.
Kavita, we should conclude
We
today's
have
session here.
time limitation. Yeah, we have time limitation. So we have to wind up this session as Tarun already told you. You can send out your query, are most welcome. You can send your queries at sales@taxmann.com. It will be answered. Okay, Tarun?
Thank you, everyone, for joining this session. It was a very interactive session, and we had a lot of queries, and we discussed the legal aspects as well as the practical issues related to the filing of Form 24Q. And Kavita has also given the demo of e-TDS software. And many people were asking about the full demo of the software. For that as well, you can write to the sales@taxmann.com, and the team shall be contacting you for the same. Thank you, everyone. Thank you, Kavita.
Yeah, thank you, everyone. Okay, Tarun, thank you so much. It was a nice session. Okay, thank you, all of you.